My name's Andrew Stotz from the Valuation Masterclass, and I want to welcome you here to a final presentation of one of our Valuation Masterclass Bootcamp graduates. Today, we're going to be hearing a presentation about the company Cummins. It's an interesting one, and it's one I don't know that well, a company out of the US. And so I'm really looking forward to it, and I hope that you will also learn from this presentation. Most importantly, feel free to ask any questions that you may have. By the way, the next boot camp will start in 46 days. That's May 26th. And we have a special coupon code that I showed on the screen earlier. Look at that. That is BC20 live to claim a $900 discount. So check it out. Let's get started. All right. Himani, are you ready to rock?
Yeah, I'm very excited.
Yeah, I know you're ready. And how many hours do you think you've put in to getting to this point, by the way?
I think 160 plus hours.
160 plus hours.
Yeah, yeah.
And how many complete equity research reports have you written before this one?
None. This was my first one.
Yeah, that's what's going to be interesting. And for the listeners and the viewers out there, that's the amazing part is that we're looking at really the first attempt, and I think the attempt is excellent. So I'm going to bring up the screen right now to show your presentation. So just give me a second. And now we see your presentation, and I think we're pretty much ready to go. So in just a second, I'm going to exit, and then you start as soon as I tell you I'm exiting. Ready?
Yeah, okay.
I'm going to exit now. So go ahead and start.
All right. So, good evening, everyone. This is Himani Gupta, and today I initiate coverage on Cummins Incorporation with a buy recommendation based on a target price of US dollar 368, implying an upside of 17.5% from the current market price of US dollar 313. I derive my target price from an FCFF based valuation using a weighted average cost of capital of 10% and a terminal growth rate of 2%. So, today I will walk you through my analysis and valuation of Cummins Incorporation, and together we will see what the future holds for the company. But before that, let's first have a look at some of the highlights of Cummins. Firstly, I expect power generation and distribution segments to drive revenue in 2025. Secondly, there will be expansion of revenue in emerging markets in the near term due to high demand. And thirdly, intense competition and new emission regulations may impact profitability in the long term. One of the biggest risks that the company faces right now is extensive government regulation. And we will look at more risk about the company later in the presentation. Let's first understand what the company actually does. So, Cummins Incorporation is a US multinational power solutions leader. It operates in five segments, namely engines, components, distribution, power systems, and etc. Its major markets include North America, followed by China, India, and Europe. As of fourth quarter 2024, it held a 3.4% global market share. And its competitive advantage is because of its strong economies of scale and innovation in new technologies and power solutions. These are some of the stories upon which my entire valuation of the company is based, and on the basis of which I do recommend buying the company. Let's see them one by one. Firstly, power generation and distribution segments to drive revenue in 2025. Due to economic uncertainties, demand for trucks in North America is expected to remain low this year. Hakar and Daimler, Cummins' largest customers, forecast that retail sales for trucks will slightly be down by up to 3%. However, the company expects revenues from the power systems and distribution segments to increase by 2 to 7% in 2025 due to higher volumes in power generation markets and enhanced pricing. As a result, I expect overall revenue to grow marginally by 2% in 2025. Secondly, there will be expansion of revenue in emerging markets in the near term due to high demand. Emerging markets such as China and India contribute 9% and 5% to Cummins' total revenue. As per Cummins, India stands out as Cummins' fastest growing emerging market to about 6% year on year basis. With CPCB 4 plus norms in effect from mid 2024, India's genset market has expanded by 35 to 40%, and it supports optimistic demand in the future for emission compliant products. In both China and India, I expect revenue to rise 4 to 5% year on year till 2028, driven by power segment, robust aftermarket business, and a strong truck demand in China, leading to an overall revenue increase of 5%. Thirdly, because of intense competition and new emission regulations, it may impact the profitability in the long term. Governments in India, China, Germany, and California plan to phase out diesel powered products in the long term, which could impact Cummins' core engine sales. While Cummins is investing in alternative fuel engines, these technologies require high R&D spending and may yield lower profit margins than diesel. Additionally, competition from Tesla, Nikola, and in fact Cummins' own customers may squeeze its market share. While Cummins may continue to scale in the long term, I expect its net margin to squeeze by 2 to 3 percentage points post 2032 when the EPA regulations will be in full effect. Now, since Cummins belongs to the capital goods industry, it is very important to understand the growth outlook of this sector. As we can see from the top right hand chart, International Holding Company is the biggest company in the capital goods sector, followed by General Electric Company and Caterpillar. This sector remains extremely vital for industrial development, with global capex rising 4% and revenue expected to grow 4% in 2025. In fact, a Jan 2025 report from S&P Global Ratings estimates capex to grow 4 to 5% in the US, 3 to 4% in Europe, Middle East, and Africa, and 1 to 2% in Asia Pacific region, due to strong investments in infra and energy, with major spending on power grids in Europe and data centers fueling demand. According to Faster Capital, it is projected that capital goods industry will grow at a CAGR of 5% throughout 2030. However, this industry faces some challenges, such as high interest rates, which could delay investments and increase refinancing risk for leveraged companies. Investments in automation and innovation will continue to drive growth even amid these uncertainties. And despite the increase in global capex, I expect the capital goods industry to rise slowly and steadily. Before we understand the future of the company, it is very important to understand how it has been performing in the last few quarters. So, we can see that total revenue decreased 1% year on year in the last few quarters due to the divestiture of Atmos filtration technologies, weak truck demand in North America, and global construction markets. However, the gross margin improved due to favorable pricing and higher volumes, and also net margin improved significantly, and this was the recovery from a $2 billion charge paid in fourth quarter 2023 as required by settlement agreements in USA. When it comes to the latest news, Cummins is expanding into new products and coming up with new technologies such as battery energy storage systems and P7.2 diesel gasoline engines, meeting the upcoming EPA greenhouse gas emissions phase 3 rule in 2027. So here we are with analyzing what the consensus states about the company. A consensus rating of 2.5 suggests that analysts have a mixed view on Cummins Incorporation. That is, there is some optimism, but not strong enough for a clear buy recommendation. Over 66% of analysts hold a neutral view of Cummins, and the target price indicates a potential 29% strong upside. According to the revenue breakdown, the highest revenue for the company comes from the distribution segment of about 33%, followed by components 29% and engine segment 26%. Accelera just contributes 1% as it is in the early stages of the company, with efforts primarily focused on the development of electrified power systems and electrolyzers, meeting the emission regulations of the government. Geographically, The highest revenue for the company comes from the US, 57%, followed by China 9%, India 5%, and other countries 29%. Now, this is a framework which has been developed by A Stotz Investment Research in order to compare the company to its peers and rank it. And according to it, Cummins Incorporation appears to be moderately attractive related to 1,750 companies in the USA. When it comes to the fundamentals, valuation, and momentum, then the company seems to be doing really good, as signified by high return on equity, low PEG ratio, and the positive EPS growth. However, in terms of risk, the company ranks in the bottom 40% due to very high net debt to equity ratio, although we can see from the past trend that it has been coming down. This is another benchmark used by A Stotz Investment Research, which is called world class benchmarking. And in this, we can see that Cummins ranks in the top 20% in terms of profitable growth in the past 12 months among 1,000 to 90 large industrial companies globally. And this is both due to great profitability as well as great growth. However, we can see from the bottom line that in the past 12 months, revenue growth was not good due to demand right now, but it was strongly offset by good EPS growth, and this gain was due to divestiture of Atmos. Now, let's see some of my forecasts for the company in the coming years. I expect revenue to grow steadily in the coming years, but in 2025, I expect it to grow only by 2% because currently, for the North American market, the demands are not strong. The net profit is also expected to grow, however, it will grow at a slower rate. I expect net fixed asset to grow for the company in the coming years because in the annual report, company states that it will increase its capex. I also expect current ratio and liquidity to improve for the company because of increased retained earnings. And following that, our net debt to equity ratio will also do good from 0.5% in 2024 to 0.2 in 2027. Now, coming to our capex, the company states in its annual report that in 2025 it will do capex of around $1.4 billion to $1.5 billion. And as per my analysis, the company always follows what it says. So I expect $1.4 billion 2025 and I increase my capex in the coming years in line with that, assuming that they will invest in new R&D projects and new technologies. The free cash flow to the firm is also increasing in a moderate manner. Okay, so in terms of relative valuation, when we compare a company to markets, we can see that Cummins PB to ROE multiple related to US peers in the global market, indicating that the stock is undervalued. In terms of PE also, we can see that Cummins is undervalued in comparison to the USA and the world. However, it is expensive than the Asian market companies. For 2025, I expect EPS growth for the company to be negative because of which our PE to EPS multiple becomes unmeaningful. So, I derive valuation for my company assuming a cost of equity of about 11%, weighted average cost of capital of 10%, and a moderate terminal growth rate of 2%. And using a FCFA based methodology, I arrive at a target price of US 368 per share, indicating a 17.5% upside as compared to the current market price. If I do my sensitive analysis and assume that things appear to be more optimistic than I expect, then uh, it will result in a target price of US 394 with a gross margin of 27%. Conversely, in the pessimistic case, the gross margin is assumed to be 23%, yielding a value of US 341 per share. Now, finally, coming to the risk of the company. Extensive government regulation is one of the biggest risks of the company right now. It is extremely uncertain, and complying with new regulations may be challenging and expensive, and it may hurt its market competitiveness. Secondly, many companies all over the world are planning to phase out diesel powered products, which may impact its diesel business over the long term. Thirdly, company already faces competition in the diesel engine business. And when it is transitioning to new technologies, it may lead to additional competition from the companies like Tesla and Volvo from expanding technologies. Lastly, from its suppliers. And any impact in their delivery may impact its ability to deliver products to the customers, harming its profitability and cash flows. And with it, I would like to wrap up my analysis of Cummins Incorporation with a buy recommendation and a target price of US dollar 368. Thank you so much, everybody, for listening to me, and I'm open for any queries and questions. Thank you.
Excellent, excellent. I'm going to go to the first question, which comes in from Moment, and it's related to share price. And if I look at the blue line on this screen, we can see that it went up a lot. It did come down a lot recently, but Moment said the stock has been going up recently. So, what would be the catalyst to keep it moving even further? So, what would be your answer to that?
Okay, so Cummins is doing good right now, and in Cummins in the past has a very good name in terms of having cutting edge technologies and always being innovative in terms of new products. So in the coming years, also, since it is investing a lot in its accelerator segment and alternative technologies, and is also doing good in power segments in the emerging markets like India and China, I expect these two factors are going to continue derive its target price in the coming years.
For me, I was a little bit surprised about the slow growth coming out of India in particular. I would have thought that Cummins would be getting a lot of growth because it's an emerging market. It's going fast. They're relatively new there compared to, let's say, U.S. or something. Why is it so slow in growth, so slow from India?
Mm, I think growth is slow in India because currently India is a developing market, and there's a lot of potential for infra investments in the country right now. So even though there is demand coming from India and Cummins is expanding there, but Cummins expanding there also depends on how much India expands in itself in terms of infra and energy. The demand would come from India growing in itself. So that's why it is slow. But as India adapts itself in the coming years and continues to grow, I think it would be giving great boost to
Is
Cummins.
is Cummins a premium product in India, so it's not going to capture like a mass market or something like that?
It depends on the product. Like if it comes to the gen sets like diesel generators and the data centers. So Cummins in these two sectors have the largest market share in India. So about 35%. So in that area market, and in other technologies, like it is slowly developing.
And I look at your forecast here on the front page. It's about 7% growth for profit. Why should I buy now when it seems like it's really kind of a steady or slow growth company?
You should buy it because even though it's moving slowly, but in the coming like it is growing slowly because right now there are many uncertainties from the mid last year. But in the coming 2 years, when the markets will revive, it will give a big boost uh, because of many reasons, and because of its new products also. So I recommend buying for the short term, for the 2 to 3 years horizon. So in
Okay.
that, I think there's a growth.
And Moman asks, what are your thoughts on the future of a seller segment? Could it move to become a major revenue source?
Mm, okay. So in the near term, in terms of 5 years, I do not expect Accelera to grow very majorly. I mean, it will grow definitely, but I think it will grow slowly because its growth depends on people adapting to it. Like, so it's like products are in the new technology, so it depends on the coming demand, and the demand will come when there are regulation changes and all of that. So I think it will grow post 2029.
Okay, can you go to your free cash flow table?
Sure.
Okay, so we got a good question from Babu Rao, who says, "Why would there be a significant reduction in the change in net working capital?" Maybe just talk about the net working capital line. We can see it's pretty big, negative in 2022, and then big positive in 2023, and then big negative in 2024. What are your thoughts about your forecast?
Okay, so I think if I see the past years, there's a huge fluctuation mainly because of change in accounts payable. And it depends on the company's policy base. Like in some years, it decides to pay accounts payable. In some years, like it increases inventory. So in future, it is not very certain in terms of the growth prospects. So I basically normalized it in the coming years
Okay.
on the basis of the
Yeah, I
past.
guess if you look at the ups and downs in the prior years, it works out to, a small negative number, which is what you end up coming up with. So, because the concern is if you
Yes,
were too
yes.
negative on that, or it was too much of a negative that uh, it would, if it's too low of a negative as it is right now, there's the risk that it could be higher, and that
Hmm.
would reduce the free cash flow to the firm and therefore reduce the value. But I think if you're doing it as an average, and thinking of that, I think you're okay. Let's look at Geary says, will Cummins invest more in hydrogen technology to meet emission regulations or go full into diesel?
Sorry, can you
Yep.
just repeat the question?
Will Cummins invest more in hydrogen technology to meet emission regulations or go full into diesel?
Okay. So I think right now Cummins is investing more in diesel products, and not specifically diesel products, but in terms of developing technologies to make diesel products more emission compliant, so that like it can meet the standards that the US government sets and the other countries sets. So right now it is investing more in the diesel business. And in Accelera, it is doing more of a research and development. But in later years, I expected to invest more in Accelera because that is where the future lies.
And let's go to the last question, which is just talk about the transition to clean energy of this company. In other words, let's talk about, for instance, what amount of their sales are traditional, products versus much more green products, let's say.
Okay, so the percentage distribution
Yep.
of that. Okay, so this kind of distribution or segmentation is not clearly mentioned by the company because like mostly till now its product is in traditional technology, whether it comes to engine segments or power system segments. But what it is doing right now, it is slowly making those products more emission compliant or maybe green. So right now, in terms of my understanding, I do not expect their clean energy products to be more than 10 to 20% of their whole portfolio.
Okay. So, how does it feel to graduate from Valuation Masterclass Boot Camp?
It feels so amazing, and it feels like a strong accomplishment because I do remember that in the first week when you showed us the presentation of the students presenting in their final week, I was little overwhelmed and I wondered how can someone transition that way in just 6 weeks. But here I am, and I literally can't believe
Yeah,
that.
it's amazing. And tell me, how would you describe the transformation that you went through in the class?
Okay, so I think one of the biggest transformation that has come in me is boosting my confidence because you have always encouraged us to speak in the meetings, to patient to take initiatives and to even express ourselves on LinkedIn and to others. So this has really helped me increase my confidence and also helped me develop a structured thinking in terms of everything I approach or any research I approach. So I am more confident in myself, whether it is like practical skills or my speaking skills.
Well, and it shows. So I want to congratulate you. It was a great job. And I'm going to see you in our group in just a second. I'm going to take you out here, but well done. And I'll talk to you soon.
Yeah,
Okay.
sure.
Amazing and impressive. Gone from zero to producing a full on report on the company named Cummins. If you want to build a competitive advantage in company valuation, just join us in the next Valuation Masterclass Bootcamp, which starts in 46 days. You get a $900 discount, but that lasts for only 7 days. So make your decision now. My name is Andrew Stein.